Is Oracle turning into a cash machine thanks to OpenAI? Or is it really just a giant leveraged gambler going all in on an unprofitable AI startup? And if OpenAI stumbles, who will end up paying the final price? In today's video, we're going to break down how Oracle went from a second-tier player in the cloud market to a critical provider of computing power for the most famous AI company in the world. Why Wall Street once went crazy over its more than $400 billion contract backlog, and then suddenly flipped to worry and doubt. And more importantly, we're going to wrestle with a question you simply can't avoid. Is Oracle laying the foundations for the future, or quietly putting itself in the line of fire if the AI bubble bursts? Watch until the very end, because we're going to walk through the numbers, the risks, the opportunities, and the scenarios that may determine not only Oracle's future, but the future of the entire global AI infrastructure race. Before we talk about mountains of debt, AI bubbles, or financial risk, we need to rewind a bit. How did Oracle even get to this position in the cloud and AI game? For many years, when people talked about the cloud, the conversation almost always revolved around three names: Amazon, Microsoft, and Google. Oracle was rarely mentioned in the same league. The turning point came when Oracle landed a massive deal with OpenAI, the company behind ChatGPT, the symbol of the generative AI revolution. With that handshake, Oracle almost skipped the line from latecomer to one of the key providers of computing power for this new wave of AI. Instead of trying to compete with apps or consumer services, Oracle chose to focus on what the AI world is desperately short of: raw compute. Huge data centers, rows and rows of GPUs, power, cooling, bandwidth, all at a scale that very few companies can build fast enough. That's how Oracle ended up with a contract backlog of more than $400 billion. On September 10th, after Oracle announced the backlog number, the stock exploded, jumping as much as 36% in a single day. But behind the headline $400 billion backlog, it was a detail that started to give Wall Street chills: Oracle's extreme dependence on a single customer, OpenAI. The first problem, a very large chunk of that $400 billion figure, according to analysts, it is tied to just one customer, OpenAI. Estimates suggest that data center contracts are related to OpenAI. It could be as high as around $300 billion. That means Oracle is facing a level of revenue dependence on one customer. That is almost unprecedented. Oracle's future growth rate is now tightly bound. To determine whether OpenAI can keep running at full speed, if OpenAI keeps expanding, keeps raising money, keeps buying more computing power, Oracle looks like the genius that moved one step ahead. But if anything stalls, tougher regulation, new competitors, a shift in the business model, or a slowdown in AI funding, Oracle faces a tough question. How much infrastructure have they built just to serve one customer? And how long can that customer keep spending aggressively? And that's only half the problem. The other half lies in how Oracle is financing this wild expansion. To keep that growth pace, Oracle doesn't just need customers. They need something even more sensitive: money. A lot of money. And most of it is coming from debt. All of that AI infrastructure is not cheap. Like the other cloud giants, Oracle is expected to help make up. More than $400 billion are being spent on AI infrastructure this year alone. New data centers, high-end chips, network systems, land, electricity, everything needs cash, and a lot of it. The issue is, Oracle isn't just using existing cash flow. They're borrowing heavily to build infrastructure fast enough before the opportunity window closes. And you can see that pressure clearly in the bond market. Oracle's 5-year credit default swap, the insurance cost against a default, has climbed to a record high. That doesn't mean Oracle is about to go bankrupt, but it's a very clear signal. The market now sees Oracle's financial risk as much higher than before. So the picture looks like this: one company carrying a large amount of debt, building an enormous amount of infrastructure to serve a small number of mega customers, with OpenAI at the center. It's a very bold strategy, but it's also a very fragile one. And when you place all of this into the bigger picture, the hardest question to ignore appears. Are we living in a golden age of AI or standing in the middle of a brand new tech bubble? Right now, valuations of AI-related companies are being pushed up very quickly, sometimes much faster than actual real-world adoption is turning into cash. OpenAI is valued at around $500 billion, but it still isn't profitable. Some estimates say it might need over $1 trillion of spending from now until 2030 to pursue its ambitions. The question is, who will keep pouring in money for such a long road? And if that money slows down or expected profits don't show up, what happens to partners like Oracle? This is why Oracle's stock has given back that earlier 36% surge. The market has started asking, are we looking at the foundation of a multi-year AI infrastructure cycle or the first signs of overbuilding? Of course, from Oracle's point of view, this isn't recklessness, it's a strategic move, and they have some very clear arguments to push back against the fears of a bubble and over-dependence. In October, the company painted a very ambitious picture. Cloud infrastructure revenue could rise to $166 billion by 2030, and they insist that growth will not come from OpenAI alone. Oracle emphasizes that new contracts are being signed with many other customers, including a $20 billion deal with Meta. The message is very clear. We're not just OpenAI's landlord, we're building a broad AI and cloud platform. On margins, Oracle says it expects 30 to 40% gross margin for its AI cloud infrastructure business, lower than traditional software, but still attractive if they can reach a large scale. For cloud software and infrastructure serving enterprise customers overall, they are targeting margins in the 65 to 80% range. If those numbers become reality, today's huge infrastructure spending spree might one day be seen as a smart land grab in a rare infrastructure cycle, not as reckless behavior. All of that sounds very long-term, but the stock market is brutally practical. Will revenue and profit go up next quarter or not? So, in the short term, what are Oracle's numbers saying? Right now, analysts expect Oracle's cloud infrastructure revenue to grow more than 70% year over year for the period from September to November, even faster than the 55% growth in the previous quarter. Total revenue is expected to grow about 15% to more than $16 billion, the fastest pace in more than 2 years. Net income is also expected to grow by double digits. In other words, on paper, the AI bet is delivering very nice short-term results. Revenue is accelerating. Oracle, once seen as an old-school database veteran, it is suddenly being looked at as a high-growth player in AI infrastructure, and that's exactly what makes this debate so intense. The current numbers look great, but the risk structure behind them is what keeps people up at night. In the end, to understand whether this is a genius move or a wild gamble, we have to look at the scenarios. What happens if everything goes right? And what happens if the trajectory shifts? Scenario 1, OpenAI runs out of steam. Maybe because of the regulation, maybe because of competition, maybe because the business model starts to show cracks, or simply because capital markets are no longer as generous as before. OpenAI can't keep spending on that trillion-dollar trajectory as planned. In that case, Oracle would have to slow down its infrastructure build-out, write off some contracts, and focus on reducing debt. That would definitely hurt financial results. But according to many experts, it's unlikely to push Oracle to the brink of default, because underneath it all, there is still a huge software and database empire. Scenario 2, OpenAI continues to execute on its vision. It raises capital, it expands its products, it spends on infrastructure to the tune of trillions of dollars. The AI wave keeps swelling. Demand for computing power explodes, and Oracle's data centers stay full. In that scenario, Oracle looks like it played a brilliant move. Today's massive debt load is gradually absorbed by future cash flow. The risky bet turns into a success story. And as one analyst joked, if one day OpenAI really reaches super intelligence, spends $1.4 trillion, and somehow helps humanity never have to work again, Oracle will almost certainly be just fine. Reality will probably land somewhere between these two extremes. But the key question doesn't change. Has Oracle moved early to secure a unique position in the AI infrastructure stack, or has it tied itself too tightly to a single partner, right at the peak of the frenzy? What about you? Share your thoughts in the comments below. If this video helped you see the backstage side of the AI wave more clearly, hit like and subscribe to the channel so you don't miss the next videos.